Hey, it's Mark Yagi. Welcome back to the channel. And, we like stocks that want to break out, and we're in a green market, and we're like, a lot of stuff is setting up right now. So the computer is popping up a lot of things onto my list that are interesting. So I thought I'd tell you about it. By the way, this is all education and information and not investment advice. You know the drill. Do your homework, but this is maybe part of your homework. Anyway, so you know what we like to do. We like to buy the right stock in the right market at the right spot on the chart, and then we squeeze the juice. We don't always have the right spot on the chart, frankly, right? And that makes it a little bit tougher because everything that we do is for probabilities, right? We just try to inch out a little bit of probabilities in our favor. And so if we can get a little here and there, then we can add to those probabilities. And so the right market, green, right? We're green right now. I don't know if it's going to stay green, but we're green right now. The right stock. I'm going to show you this stock. You're going to love it. You've seen it before, by the way, if you've been watching the channel. The right spot on the chart. Well, this one is at the right spot on the chart. And then we're going to squeeze the juice. I'm going to show you how we do that. So I just did another video on Datadog. This is very similar. It's another tech stock. Let's take a look. It's called NVidia. And you know about NVIDIA. It's an AI play. Graphics processing play. Like NVIDIA is kind of taken over the world when it comes to chips. And they are in all the cutting edge AI technology, artificial intelligence. So they're building the chips that run the computers that run the artificial intelligence. They're building chips for Tesla, which is running and creating one of the biggest artificial intelligence systems in the world. They're running systems for themselves, by the way. They're running systems for other companies. They're also in all of our computers, and like they're everywhere, these guys. So let's take a look at what the stock looks like. Now, I'm not going to go too far into the depth of why this is a great stock. If you've been watching the market at all in the last couple of years, you know that NVIDIA is a great stock, right? It's one of those super stocks that we look for, and I'll show you why. Let's start at the left side. Over here on the left side, we've got a stock going from, well, look at 250 in 2021 in earnings, and then it went to 444. And then it went to 334, which is a bit of a decline there, right? But then, boom, look at it, up to 11. That's a 230% increase in earnings per share that they're estimating. And we even have the luxury of seeing what 2025 is because their calendar year is off from their fiscal year. So look at that. It went from 444 in 2022 to 1873. That's a quadruple in earnings. That's what makes stocks go higher, is how much money they're going to earn. So if any of this is true, man, boom, this stock is going to go higher based on, my past experience. Okay, so we've got good earnings. Let's go all the way down to the bottom. Look at those sales at the bottom. So you're saying, over here, this is sales. The sales change up 53%, up 46%, up 3%, down, down, down. But then it makes up for the down. Maybe it does. Up 100%, up 200%. Boom, sales is there, right? Let's take a look over on earnings per share. Quarter over quarter, 69, 49. Then we had a year where they declined, okay? And then boom, it's not just 12% or 20, it's 429% and 593% last quarter. So this company is knocking it out of the park. I don't know if the stock is trading commensurate with that or not. Sure doesn't seem like it to me. If you look on the right side of the chart, well, we'll go there in a second. Earnings per share growth is on average about 37%. And again, we had that little decline there for a couple years, or this past year, or this year, I guess. And then return on equity is 34%, but they got 44% debt. So still pretty good. A 34% return on equity is excellent. Okay, so we've got all the fundamentals, and they do all the right stuff, and the numbers are pretty good there on the left side. Over here on the right side, we've got this beautiful little run that it went from, it went all the way down to 120. And I know some people that rode that all the way down and they got out near the bottom, which is like so sad that you don't stick with something if you've rode it all the way down. But that's human nature. It happens all the time in the stock market. And then you bail at the bottom, and we're probably going to sell right here at the top. That's why you're seeing this stock kind of consolidate for months. This is a months long consolidation from 400 to 500. Look at it going bouncing around in there from 400 to 500. You see that little bounce around in there? I mean, it's crazy, right? And so that is basically a long consolidation. Now within that consolidation, I've drawn this little double bottom pattern. It's a W, right? You see this W? And then at the top of the W in the middle, the apex of the two V's, W from the German word double V, right? W. It comes to the apex there. That's the breakout point. And so you can see we had a breakout point, looks like about 6 weeks ago, and it didn't succeed. Why? Look at the volume at the bottom. If the volume is not high, right? I like to look at least 40% higher volume on a breakout. If the volume isn't high on the breakout, usually the breakout will fail. So now it went back down, it touched the 50-day moving average, that red line there. It's hard to see with all my red lines. And then it bounced back up last week. Now, we've got a new week coming up here. Okay, we're about to open, the market's about to open here in a couple hours. And so we've got a new week coming up here. Now, it's bounced off that 50. I call that a bounce week. And what happens this week is a very big week. Now, if we get high volume, let's say the market continues to take off like it's been doing lately, just kind of taking off to record levels. Well, that's going to take tech stocks higher. If it takes tech stocks higher, this is one of the big ones, right? And so if it takes them higher, and this is one of the big ones, this is going to get a big volume spike at the exact spot that you want it to get that volume spike, which is the breakout from the top of that W, which is basically right where it is. It's breaking out from the top of that W right now. Now, if we can get a follow-through week where we got a bunch of volume, this stock probably goes to 600. That's the way I read the chart. I have no idea if it's going to 600. It might go to 400, right? It might go to 300. But the way I read the chart, I've been reading hundreds of thousands of charts. To me, that's where this thing looks like it's going. But I'm not Nostradamus. So what I do is I do the fourth part of our cash flow machine, cornerstone strategy, and I collect the juice. So let me show you what the juice looks like. So here's the option chain, and the stock is just, when I pulled it up a second ago, it was just under 490. So we're going to look at it. I think it was 489.79. So we'll use those numbers. And so the 489.79 number is the number we're going to use, and we're going to go out basically 5 days. It says 4 days, but we haven't even started with Monday yet. So it's really 5 days that expires. Monday, Tuesday, Wednesday, Thursday, Friday. A 5-day call, right? So we got a 5-day call, and the stock's right around 490. So we can get 840 worth of juice, right? 840 to 870, somewhere in there. Or we could say, well, we think it's breaking out. So I'm going to make a guess, and I don't always like to do this, but I'm going to go a little out of the money. I'm going to go a little out of the money, probably to the 492.50. So the 492.50s are trading between 620 and 795. That's about a $2 spread. So if you split that spread, you're probably going to get a $7 fill. Let's be conservative and say we're going to get 680. Make sense? Okay, so we've got 680 there. All right, here's our calculator. So we got 489.79, 489.79. 680 is we're going to get for the call, right? We're not going to get 7. We'll get maybe 680 of it. And then it's going to be a strike price of 492.50. Now you can go a little higher maybe if you think the stock is going to continue to run. I'm just trying to make my juice every week. I'm not trying to get greedy. That's what we do in the cash flow machine. We just try to, this is not about the stock going up. All that stuff that I just said, none of it matters except that it helps you make the weekly income. That's what we're in it for. It's a total mind shift. You have to focus on the income, and it's really hard to do because everybody's like trained to be, to buy low and sell high. But that's not what we're all about. We're about buying the stock, selling the call, but having strategies around it and really collecting the income and focusing on that. Really hard to do, trust me. All right, let's look at the calculations. So our basis now goes down to $42.99, $483. The juice is 680, as you know. We collect 1.4% for basically 5 days, right? So on 500 shares, it's $3,400 of profit. So if you can do that 4 times a month, right? We're talking about $14,000, aren't we? And the return on investment is only 1.41%. But guys, it's only for a week. And the shorter the period, the higher the likelihood that we'll probably get there. We're only one strike out of the money, and that thing could move $2.50 in the blink of an eye. It could go the other way too, by the way. All right, annualized return is 103%. So you're basically doubling your money if this thing does what it does, goes to the strike price and it gets called away, or you just roll it and do it again. You're making 103%. Even if you're only right half the time and the stock doesn't correct a lot, you're still getting the juice. And that's what keeps us in this game, okay? So we've got 1.4% for the week. We've got a stock that's breaking out. We've got a green market. We've got a really good stock. I don't know. This seems like a really good one. Do your homework. I hope this helps. See you on the next video. Hi, I'm Mark Yegi. Every new year brings hope. But have you ever made those resolutions and by February they're out the window? Yeah, me too. This coming January 13th and 14th, join me at Your Greatest Year. It's an online summit dedicated to setting you on a path to transformation, abundance, and growth. Make your resolutions a reality. Let's create magic together in 2024. Make 2024 your greatest year. To register, go to 2024yourgreatestyear.com. Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.